So we'll start our discussion with problem 6-9 and 6-10. And then the question in 6-9 is asking you for the amount that would be recognized as a state equity or deficit. Equity if it's positive, deficit if it's negative. But in this case, obviously, we will have a deficit because, again, the normal scenario for corporate liquidation is that your assets are not sufficient to pay off your liabilities. And again, the most straightforward approach, class, in solving for your deficit or your deficiency is to go back to your basic accounting equation, which is your assets is equal to liabilities plus equity. And if you're looking for the deficiency or the deficit, class, then you are simply looking for your negative equity. So if you're looking for deficit, you solve for your negative equity. Your equity will have a negative balance. Okay? And how do you solve for your negative equity balance? Again, you go back to your basic accounting equation, which is your assets is equal to liabilities plus equity. So let's try to do that here. We're given with two valuations for your assets, class, assets at book value and your assets at net realizable value. So for corporate liquidation problems, class, again, the most relevant valuation would be your fair value, or in some cases, your net realizable value. So between the 100 and the 75, class, we will be using your 75,000. Okay. Next, if you want to solve for your negative equity, you need your assets and your liabilities. Whatever is the difference between the two will serve as your negative equity. We have already determined that our assets would be 75,000. Next would be your liabilities. Okay, so your liabilities here would be your fully secured mortgage, which is 40,000, and then your unsecured accounts and notes payable, which is 45,000. But aside from this, class, you will have to recognize additional liabilities, which will have to be paid in the course of the liquidation. So in your use of the basic accounting equation, you will have to include the unrecorded liabilities of interest and administrative expenses. So in solving for your negative equity, you will not just be using the previously recognized liabilities. You will have to recognize additional liabilities representing expenses that has accrued since the liquidation. So the computation for your total liabilities here would be 40,000 plus 45,000 plus 250 plus 4,000. How much will that give you, class, as your total liabilities? That's 85, 89, and then 250. Your total liabilities then would be 89,250. Those are the amounts that you will have to pay in the course of the liquidation. But how much cash do you have? How much assets do you have to pay off these liabilities? You only have 75,000. Your assets are only 75,000. Your liabilities are 89,250. So that means you lack how much? How much is your deficiency? Or how much would be your negative equity following the basic accounting equation? You will have 14,250. And that will already be the answer for problem 6-9. Again, equity, class, or deficiency or deficit is a very common question, class. Again, the most straightforward approach is to use the basic accounting equation, and you use the basic accounting equation in solving for your negative equity. For problem 6-10, the question is how much would be the deficiency to unsecured creditors? Basically, class, it would be the unsecured creditors that will suffer the deficit, class, or the deficiency. And we have already determined that our deficiency was 14,250. So the deficiency here would also be, the answer number 10 would also be 14,250. Why is there a deficiency? Because again, the assets are not sufficient. The assets are not sufficient to pay off your liabilities. Okay. Alternative solution to problem 6-9 class is by starting at the book values and then by recognizing impairment losses and additional expenses. What do I mean? In solving for negative equity, you can start the book values. How much is the assets at book value, class? 100,000. Liabilities at book value, you have 40,000 and 45,000. So your assets at book value is 100, then your liabilities is at 85. That means at book value, you have an equity of 15,000. Using the basic accounting equation and using the book values, your equity will stand at 15,000. I hope you're able to get the 15,000. Assets at book value of 100, liabilities at book value of 85. Okay, assets is equal to liabilities plus equity. That would mean that at book value, you will have an equity balance of 15,000. But in the course of liquidation, because again, you will have to restate your assets to their fair value, or in this case, the net realizable value. Plus, what happens if the carrying amount is greater than the fair value, class? What happens if the carrying amount of an asset is greater than its fair value? We will say that the asset is impaired. So how much is the recoverable amount for our assets? Only 75,000. How much was their book value? 100. So in some extent, we can say that the assets are impaired in the amount of 25,000. And what does an impairment loss do to your retained earnings? What does it do to your equity? If you have a loss, what does it do to your equity? Does it increase or decrease your equity? Decrease. So remember, our equity at book value was 15. But because we have to write down our assets at the recoverable amount, it will now be, we will have to recognize a loss of 25,000. And what does a loss do to your equity or to your retained earnings? It decreases. So from 15,000, we will now stand at negative 10,000. Okay? And then you will have to recognize additional liabilities. When you recognize these interest and administrative expenses, what will be your entry? Debit expenses and credit liabilities. So that means the recognition of these unrecorded liabilities will result in additional expenses. And what do expenses do to your equity account? What does an expense do to your retained earnings? It will further decrease your retained earnings. So with this, we will have to decrease our retained earnings by 4,250. From positive 15, because of the impairment loss of 25, it was now at negative 10,000. Plus additional decrease due to expenses amounting to 4,250, your deficit would be 14,250. Okay, that will be an alternative way for solving problem 6-9. Okay, and since all the deficiency class will be absorbed or shouldered by your unsecured creditors, the deficiency that will be attributable to your unsecured creditors would just be the same 14,250. Okay. So the answer for both numbers would be 14,250. Let's have 6-11. Assume that the assets are converted into cash at the estimated current value and the business is liquidated. How much cash will be available to pay the unsecured non-priority claims? Basically, this question, class, is asking you for the amount that will be received by your unsecured without priority. Let's classify our liabilities first. I know they are already classified in the manner which we prefer it, class. Okay, you have your liabilities with priority, you have your fully secured creditors, and then you have your partially secured, and you will have your unsecured creditors. Okay, now we have our assets class. We have assets pledged with fully secured. By the way, for this one, which valuation will be relevant? The 150 or the 185? Problem 6-11, which one will be relevant? The 150,000 or the 185,000? Again, always the fair value, or in this case, the current value. So we will be using the 185. And the 185 will be used to pay off what? The fully secured creditors in the amount of 130. Okay? And then, for assets pledged with partially secured creditors, which valuation is relevant here? The 90 or the 60? The 90,000 or the 60,000? 60,000. Okay, ignore the book value for your assets. Okay, and then for your free assets, which one is relevant here? The 210,000 or the 160,000? 160. Now, in problem 6-11 class, basically you are asked how much is your net free assets. Again, in 6-11, basically you are asked for your net free assets. And in solving for your net free assets class, you begin with your free assets, and remember the two things I want you to remember for your net free assets. And what are the two things I want you to remember for your net free assets? Number one, do not forget to add the excess on your fully secured liabilities. Second, do not forget to deduct amounts to be paid to your unsecured creditors with priority. Because again, they will be taken out of your free assets. Again, class, in solving for your net free assets, there are two things that you should not forget. Number one, add the excess on the fully secured liabilities and deduct the unsecured with priority. Okay, so let's start. How much is our free assets in this problem? We will begin at 160. Again, ignore the 210. Begin with 160. And what is the first of the two things that you should remember for your net free assets? Add the excess on your fully secured. How much is our fully secured liability? It is 130. Do we have excess assets after paying the fully secured liabilities class? Yes, because the fully secured liability is only 130 and the value of the assets pledged for the fully secured creditors is 185. So how much then is the excess here? 55,000. Okay? And that will be considered now part of your free assets. Now, what's the second thing I want you to remember for your net free assets? Do not forget to deduct the amount to be paid for your unsecured liabilities with priority. Do we have liabilities with priority in this problem? Given, yes. How much? 35,000. Okay. So we start with our free assets of 160. We add the excess on the fully secured in the amount of 55,000, and then you deduct the payments to your liabilities with priority in the amount of 35,000. How much will that give you, class? 180,000. And that will already be your net free assets, class. That would be the amount available to pay all unsecured non-priority claims. So the answer in 6-11 would be 180,000. Okay. But as I have mentioned in the initial discussion class, four common questions for corporate liquidation. How much will be paid to fully secured? How much will be paid to partially secured? How much will be paid to unsecured with priority? And how much will be paid to unsecured without priority? So let's try to answer these four. Starting with fully secured creditors. How much will be paid to fully secured creditors, class? How much will fully secured creditors receive? Again, they will always receive 100%. They will always receive the full amount of their claim. Why? Because they are fully secured. Assets are available, dedicated to pay off their claims. And that is why I mentioned, class, that for shotgun problems, asking you to answer these four common questions, 2 questions would be considered as bonus already. Again, what are these 4 questions? Payments to fully secured, partially secured, unsecured with priority, and unsecured without priority. And 2 out of these 4 will get 100% of their claim. No need to compute. You are expected to know that they will get full amount of their claim. And who are these 2 kinds of creditors? Your fully secured and your unsecured with priority. Okay, the fully secured will get 100% because assets are available to pay them off based on contract. And then unsecured with priority will still get 100% even though no security is available, because by provision of law, they will have to be guaranteed. Okay. So if the first question is how much will fully secured creditors receive, no need to compute, class. You just look at the given and your answer would already be 130,000. Let's skip partially secured. Let's answer liabilities with priority. How much will be paid to your liabilities with priority? Again, no need to solve. They will get 100% of their claim. And how much is your liabilities with priority? 35,000. So if the problem asks how much will liabilities with priority receive, they will receive 35,000. The 2 items that will require computation, class, would be the amounts to be paid to your partially secured and your unsecured without priority. And in solving for the amounts to be paid to these 2 groups of creditors, class, the most crucial again is the computation of your recovery rate. And the computation of your recovery rate is very simple. Net free assets over unsecured liabilities without priority. Again, in solving for your partially secured and your unsecured without priority, the most crucial is the computation of your recovery rate. And your recovery rate is simply your net free assets divided by your total unsecured claims without priority. Okay, and as I have mentioned earlier, what are the 2 things that you should remember for your net free assets? For the numerator for your recovery rate, you start with free assets, and the 2 things that you will have to remember are, number 1, add the excess on fully secured and deduct the unsecured with priority. Okay, but since we have already computed the net free assets in this problem, we already have our numerator for our recovery rate. How much would be the numerator, class? As we have solved earlier, it was 180. The next thing we need would be our denominator. And what is our denominator in the recovery rate? Total unsecured claims without priority. And there's one thing you should remember for the denominator, class. Do not forget to include or do not forget to add the unsecured portion of your partially secured liabilities. Again, do not forget to include or add the unsecured portion of your partially secured liabilities. Okay? Do we have partially secured liabilities in this problem? Yes, in the amount of 100,000. Why are they considered partially secured? They are secured because assets are available or assets are set aside to pay them off. But they are only partially secured because the value of the assets pledged are not enough to cover the entirety of their claim. Okay, how much is the value of the assets pledged for the partially secured creditors, class? 60,000. Does everyone see the 60,000? Assets pledged with partially secured creditors. Okay, our partially secured claims is 100. The amount of security is 60. So how much then is the unsecured portion? How much then is the unsecured portion? You will have 40,000. And you will add that in computing for your denominator. Okay? How much was our unsecured creditors? 270. Then you add the unsecured portion of 40, you will have 310. Okay, so how much was our numerator, class? Our net free assets? 180. And then our denominator would be 310. Will it give you a good percentage, class? How much will it give you? How much? 0. So perhaps this problem will not be a good illustration for solving your partially secured and unsecured. But at this point, what's important is that you remember the formula for your recovery rate. What's the formula for your recovery rate, class? Net free assets over total unsecured claims without priority. And in remembering the numerator and denominator, class, how many things do I want you to remember for your net free assets? Two. The first one, do not forget to add the excess on your fully secured liabilities. And second, do not forget to deduct the unsecured claims with priority. And how many things do I want you to remember for your denominator, class? One. And what is the one thing we have to remember in our denominator? Add the unsecured portion of your partially secured liabilities. Okay, let's proceed to problem 6-12. Filipino company has been forced into bankruptcy and liquidated. Unsecured claims will be paid at the rate of 50 centavos on the peso. From this problem, class, can you already be asked how much is the recovery rate? The recovery rate in this problem is 50%. Because basically, your recovery rate, class, tells you how much you would get for every peso of claim. So if the recovery rate is 50%, that means you would get 50 centavos for every peso of claim. Gold company holds a non-interest bearing note receivable from Filipino company in the amount of 50,000, collateralized by machinery with a liquidation value of 10,000. The total amount to be realized by gold on this note receivable is, so basically, class, this note is what kind of a liability? Is it fully secured, partially secured, unsecured with priority, or unsecured without priority? The non-interest bearing note, what kind of liability is this one? This is partially secured. Why do we say it is secured? Because again, a machinery is collateralized to pay off the liability. But why only partially secured? Because the amount of the security is lesser than the amount of the claim. Okay? And again, what's the most crucial, class, in solving for the amount to be paid to partially secured? It is the computation of your recovery rate. But do we have to solve for the recovery rate here? No, because it's given. The recovery rate here is 50%. Okay? Now, what do we do here? Do we multiply the 50% with the 50,000, class? The 50,000 is the amount of the claim. Do we multiply the 50% with the 50,000? The answer is no, because a portion of the 50,000 is secured. What portion of the 50,000 is secured? How much, at the very least, how much will the holder of the note receive, class? Worst case scenario, it will receive the amount of the security in the amount of 10,000. Okay, but how much was its claim? 50,000. So there is still an uncovered portion of 40,000. What will happen to this 40,000? The 40,000 will be paid based on the recovery rate. And how much is the recovery rate? 50%. Okay, so how much is 50% of the unsecured portion? 20,000. Add that with the 10,000 value of the security. Total amount that will be paid for the promissory note will be 30,000. Okay. Basically, this is the only one that's complicated, class, and it's not even complicated at all. For partially secured, you give first the amount of the security. Then whatever is not covered by the security, it will be paid based on the recovery rate. Okay? The only way that you will get this wrong, class, the only way that you will get this wrong is you multiply the 50% directly with the 50,000. And your answer would have been 25,000. Okay, that's wrong because not the entire 50,000 is unsecured. 10,000 is secured and it will be paid 100%. Okay, the only portion that will not be paid in full will be the unsecured portion, which was the 40,000. Okay, so expect these kind of problems. That's very straightforward, very simple. Answer again for problem 6-12 is 30,000. Let's have problem 6-13. Question here is compute the amount that Wood should receive from NARA, assuming that the actual payments to unsecured creditors without priority consist of 78% of total claims. So basically, the recovery rate here, class, is 78%. But who is Wood in this problem? The corporation owes Wood Company 23,000 on a promissory note plus accrued interest of 940. But what kind of liability is the claim of Wood class? Is it secured or not? The claim of Wood, is it secured or not? Secured because the problem tells us inventories are collateralized for the note payable. But what kind of a secured liability? Partially secured or fully secured? Partially because the amount of security is less than the amount of claim. How much is the total amount of claim of Wood Company class? Total amount of claim of Wood Company. 23,940. Okay, but how much is the value of the security pledge for the claim of Wood? Only 19,200. Okay, what will happen to this 19,200? It will go, it will be paid to Wood Company. Okay, and how much then was not paid off? How much then is not covered by the security or the collateral? What do? You deduct the 19,200 from the 23,940. And how much will that give you? 4,740. And the 4,740 is basically the unsecured portion. Now, will the creditor not receive anything for the unsecured portion? No, it will be able to recover a portion of it. Okay? For unsecured amounts, full recovery will not be made, but you will still be able to make partial recovery based on the recovery rate. So again, the unsecured portion is 4,740. And what is the recovery rate for your unsecured liabilities class? 78%. So out of the 4,740 unsecured portion, you will only be able to recover 78%. So how much will the creditor recover on the 4,740? You multiply that by 78%. How much will that give you, class? 3697. 3,697. You add that with the value of the security. How much was the value of the security, class? 19,200. So 19,200 plus 3,697 will give you how much? Is it in the choices? Yes. 22,897. Okay, and that will already be the answer. Now, you will notice, class, for simple problems asking only for one kind of payment, class, normally they will ask for the partially secured, because again, that's the only type of claim that will have a longer computational process, class. Rarely will one problem ask for fully secured lang, because that will be a waste of question, because if it's a fully secured claim, it will get 100% of its claim. No need to compute. Rarely will you ask problems asking only for amounts to be paid for liabilities with priority, because again, they will get 100% of their claim. So problems will either ask unsecured without priority and partially secured. But why do problems prefer partially secured? Because the computation will be two-step. You will have to determine the unsecured portion and multiply the unsecured portion with the recovery rate. If the question is asking only for unsecured without priority, it's very straightforward. Unsecured claim without priority multiplied by the recovery rate, and that is already your answer. Okay? So basically, out of the 4 easy questions, the least easy is your partially secured. Okay? Let's have 6-14 to 6-17. So basically, class, problem 6-14 to 6-17 is asking you the four common questions for corporate liquidation problems, class. Okay? 6-14, what's the question in problem 6-14? What amount will be paid to creditors with priority. And for this kind of question, do we need to solve for this one class? No, because we just have to determine the amount of claim with priority, because what do we know? We know that they will get 100%. Okay? We know that they will get 100%. So all we have to do is to look for the liabilities with priority. Is it given in the problem class? Okay, given in the problem, unsecured liabilities with priority in the amount of 7,000, and that will already be your answer. Okay, so expect this kind of problems. One problem, 4 questions, and 2 out of the 4 already giveaways class. So there's no reason for you not to get even just 50% in the examination. 6-15, what is the question in 6-15? The amount to be paid to fully secured creditors. And what do we know for fully secured creditors? They will get 100% of their claim. And we don't even have to be the one to classify the liabilities as being secured or unsecured, fully secured or partially secured. The problem has already told us how much is our fully secured liabilities. And how much is it, class? Fully secured liabilities. So if you will be asked how much they will receive, the answer would simply be 30,000. And that is again letter A. But during the examination, just because there are no choices, you would second guess. You should be certain already, class. If you encounter this question, give them 100% of their claim. If those questions are asked, think of them as bonus questions, class. You're not supposed to waste any time on those 2 questions. Okay? What are the questions for problem 6-16 and 6-17? Amounts to be paid to partially secured and amounts to be paid to unsecured. Okay, but we know that for these 2 questions, one thing is crucial, and that is the computation of your recovery rate. So let's solve for our recovery rate first. Where do we begin in our numerator? We begin with our free assets. And what are the 2 things I want you to remember for your numerator to get your net free assets? Add the excess on fully secured liabilities and deduct the unsecured with priority. Okay? How much is our free assets given in the problem? 40 or 70? Again, use the fair value or the recoverable amount. Okay? So we will begin with 40. What's the first thing we have to remember? Add the excess on fully secured. How much assets do we have that are pledged for fully secured class? 75 or 90? 75 or 90? 75. Again, ignore the book value class. Use the fair value. 75. And how much is our fully secured? 30. So do we have an excess in this problem? How much is the excess? And what do we do with the 45? Add. What's the second thing we have to remember for your numerator? Deduct the unsecured with priority. How much is the unsecured with priority? 7,000. So we begin with 40. We add. What do we add to the 40 class? And then deduct 7. Will that give you 78? So that will be our numerator already. Next, denominator, your total unsecured liabilities. But what's the one thing you have to remember, class? Add the unsecured portion of your partially secured claims. Okay, but let's begin with the unsecured liabilities without priority. How much is our unsecured liabilities without priority? 112. And then the next step would be to add the unsecured portion of the partially secured. Do we have a partially secured liability? Yes, 60. How much is the unsecured portion? Check the assets pledged to it. How much is the value of the assets pledged to partially secured liabilities? 52 or 74? 52. Okay, ignore the other valuations. Partially secured liabilities was 60. Value of the security is 52. That means the unsecured portion is 8,000. You add the 8,000 with 112. Your total unsecured claims then is 120,000. So we have our numerator and denominator already. We can already solve for the recovery rate. How much was the numerator? 78 divided by 120. How much will that give you? A 65%. Okay. So we can already solve for problem 6-15, sorry, 16 and 17. Let's start with 6-17 because it's very straightforward. What do we need to do to answer 6-17 class? Determine the unsecured without priority and multiply it immediately with the recovery rate. How much is the unsecured liabilities? 112,000 multiplied by 65%. That will give you how much? 72,800. Letter D. And if you look at the choices class, it's not even trying anymore. It's just merely transposing the figures class. Because normally the problems will try to anticipate how you will solve it wrong class. But because the topic is very easy, the author can think of another way for which you will solve this in the wrong manner class. The author is expecting you to get this wrong only if what's the term? You will be careless. Okay, the choices are 72, 78, 200. Next, 6-16. Before we use the recovery rate, what's the first thing we have to do? Get the unsecured portion. How much was the unsecured portion? 8,000, and it will be the unsecured portion that will be multiplied with the 65%. How much is 65% of 8,000 plus? 5,200. And that's not in the choices because the total amount that will be received by your partially secured liabilities will not just be the recovery on the unsecured portion, but they will also get the value of the security. And how much is the value of the security class pledged to partially secured? 52. So 52,000 plus 5,200 will give you 57,200. And that's it.